Hello and welcome. Thank you for joining us on Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. On the program today, South Africa's Steinhoff, the world's second biggest furniture retailer, reports a 48% jump in 9-month sales. The International Monetary Fund approves a one-year extension of Ghana's $980 million credit facility program. Plus, gasoline prices hit $2 a gallon for the first time since 2015 as flooding from Storm Harvey knocks out almost a quarter of U.S. refineries. Let's get started now. We're beginning with the markets and looking at intraday trading in African markets. A glitch has been reported on the Nigerian Stock Exchange's trading engine. However, on Wednesday, the index closed down 1.48%. The JSE index was in the green at intraday. In the meantime, in Egypt, Global Telecom Holding jumped 7.6% to 6.93 Egyptian pounds in its heaviest trade since early June on Wednesday, after the company and its parent Venus said their subsidiary in Pakistan, Jazz, had signed an agreement for the sale of its tower business for approximately $940 million. As a result, Egypt's blue chip index gained 1.7% in relatively high volume, but the broader EGX 100 rose only 0.4%. The Egyptian market is closed for the Muslim holiday. Kenya was up 0.89% on Wednesday. In the Middle East, markets are on holiday for the Muslim celebration. However, corporate news boosted a couple of stocks in the United Arab Emirates on Wednesday. Trading volumes have generally been low in the Middle East in recent days because of the approach of Eid al-Adha holidays, which began in Saudi Arabia on Wednesday and have started for other markets today. But Ashraq Properties climbed 3.6% in Abu Dhabi in active trade on Wednesday because of news that it plans to merge with privately held developer Reem Investments. The Abu Dhabi index edged up 0.11%. Dubai's index declined 0.74%. However, weighed down for a second straight day by weak banking stocks. Investors have been concerned since Fitch downgraded Qatar's credit rating by one notch to AA- with a negative outlook on Monday. The lower rating threatens higher funding costs for Qatari banks as they replace deposits and loans withdrawn by other Arab states that have imposed sanctions on Doha. Qatar was down 0.66%. We move now to Europe. Markets there moved higher in early trade as investors digested fresh data and geopolitical fears eased. Eurozone inflation hit 1.5% year-on-year in August, the highest rate seen in 4 months. Let's bring in Janelle Dumalon to unpack all of these for us. Good afternoon, Janelle. Thank you very much for joining us. Let's start with Germany's latest inflation number and consumer price levels in August, as your labor market is being discussed ahead of September elections. What does the market in Frankfurt make of the economic news wire?
Well, I have to say, the German market here in Frankfurt seems quite unsurprised at the news. I think they're quite used to getting good data out of Germany. It's almost getting boring at this point. But yes, we did see German inflation rise 1.8%. That's beat forecasts. Also a little bit surprising, but not too much given the strong euro. And in terms of employment figures, we're seeing a seasonally adjusted rise in employment in jobs added, and that means that unemployment now is at a historic low. So there's healthy demand from companies in terms of looking for new workers, and we know that a robust labor market, of course, has positive knockoff effects on the rest of the economy because of its influence on rising wages and private consumption. Now, Germany's central bank, the Bundesbank, is also expecting this economic momentum to be sustained for the next terms. Now, obviously, all good news for Angela Merkel. You mentioned the election, that she's going in with a good record. It's happening on September 24, and she will be able to point to these positive data. But now all these positive news from Germany makes it also a bit easier to understand why they're kind of resistant to criticism when it comes to other things like the trade surplus or the fact that they might not be investing enough domestically, because it seems to be a winning strategy that they've employed. So, it's hard to convince them that maybe they should take a look at it again. Still, there are still challenges. Despite all this positive data, we know that some analysts are forecasting a slowed fall in unemployment, especially as refugees start to leave their training courses and language courses in order to look for jobs. And now that is, of course, a midterm concern, but in the longer term, analysts are also highlighting the potential shortfall in skilled workers by 2030. By 2030, the estimate is that 3 million skilled workers will be needed to fill a gap in Germany's labor market. So a mix of future challenges there, even if the current picture is rosy.
Well, Janelle, it is interesting to know that good news can actually be boring. Now, today looks like a big day for France as President Macron speaks on economic reforms and the French labor market. What are the key issues here for the region, looking at France as a key market?
Yes, certainly the French problems don't have the problem of being boring. And, you can see that in the labor market in the Eurozone, it's profited from an overall recovery in the bloc, but the French seem to have been left behind in that respect. Unemployment in France is still hovering stubbornly under the 10% mark, and this is the centerpiece of Mr. Macron's agenda. He wants to get this labor reform through. What he's trying to do specifically is, of course, to limit the power of the unions, to cap severance pay, and to allow employers more flexibility in negotiating terms and conditions with their employees instead of being bogged down by collective agreements. Now, Macron may enjoy parliamentary support in principle, but as it turns out, his stock when it comes to voters is tanking a little bit. More than half of voters say they don't really trust him with this labor reform. Some unions are already going to stage protests next month. And well, that's in contrast, of course, to the business community. The business community, of course, wants to see Mr. Macron succeed with this labor reform effort. Very often, doing business in France is compared with doing business in Germany. And in Germany, you just don't have the same restrictions placed on companies in France in terms of determining your economic future. It's quite difficult, for example, to arrange a restructure in France and in ways that, and in Germany, this is something seen as infinitely more manageable. Now, the Prime Minister of France, Edouard Philippe, has pointed to the labor code as one of the main deterrents for foreign investment in France. Investors would, of course, tend to agree. Now, this is definitely going to be the big test of Mr. Macron's presidency, but it's not just a test on the domestic front. Remember that Macron is also seen as one of the key players in determining the Eurozone's future. He wants more social integration, more fiscal integration, and investors want to see whether he'll be able to get things done at home, and then maybe he can move on to playing an outsized role in the Eurozone.
Now, Janelle, it's Labor Day in the U.S. on Monday. Speak to us about this U.S. labor market report and the outlook on this vis-a-vis the Eurozone area as we head towards the season fourth quarter period.
Well, yes, in the U.S., companies added more jobs than expected in August, 237,000 new positions added, and that represents the economy's best month since the first quarter. So we're seeing a robust job market there as well across the Atlantic, but some analysts are pointing to this risk of a tightening labor market and therefore also of more skilled labor shortages. Now, turning to the Eurozone, we've seen unemployment in the Eurozone basically hold steady at 9.1%. That is the lowest level since February 2009. Now, add that to the new inflation data that the Eurozone has. We've seen a 1.5% increase. This is still below the 2% increase that the European Central Bank set to achieve when it launched its monetary stimulus program, low interest rates and its massive bond buying program. But it's closer than we've been in the past months. So basically, here in the Eurozone, you have this narrative of steady employment and this uptick in inflation, and it's supporting the story of recovery within the currency union.
All right, thank you very much, Janelle, for your time. Hope to see you tomorrow. Enjoy the rest of the day.